Welcome to Safe Option Strategies and welcome to our presentation of the last strategy you will ever need. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies, and I got to tell you, I am so glad that you are taking some time out of your schedule to be a part of this presentation right now. I know for the majority of it, I've got a group that's with me live right now. And for those of you that are here live, I'm so glad to have a little bit of your time and to tell you a little bit about what we do and how we can help you make a lot of money at Safe Option Strategies. And I know that most people that see this presentation are listening to a recording. You got an email or you saw something online that directed you towards us, and you're watching this introduction video. And I really appreciate you taking some time out of your schedule. I'm going to go over some things for you in the next. I'm going to try and keep it to maybe 35 or 40 minutes. I'm going to go over some things for you that I really truly believe are going to help make you a more profitable trader. And more important than that, I'm going to show you a strategy. If you want to have money in the stock market and be able to make money and not lose money, I'm going to show you how to do it. I'm going to give you a couple of examples and show you how to do that. I want to be transparent with people. My preference is to be transparent with you. And if you've got on your screen a picture of a stock chart right now, but nothing else is moving, that's okay. Your screen isn't frozen up. I'll be just a quick. I'll be a brief minute here. I know you watch a lot of presentations like this. Some of you have seen my presentation multiple times. You've seen other people's presentations that are like this. And there may be some frustration on your part as you're looking for something that will help you be a more profitable trader. Maybe you're looking to get into the markets for the very first time. Maybe you're looking at just pulling some money away from your broker and managing it yourself because you're not happy with the fees or happy with the results that your broker is getting for you. Whatever the case may be, you're here watching this presentation probably because you want to make some money. You want to get profitable. You want to get more profitable than you've been in the past, or you want to get profitable for the first time, or you just believe that so many people are making money in the stock market. You want to be a part of that. I'm going to tell you, number one, you're in the right place. And number two, I'm not going to be dishonest with you about results. I'm not going to be dishonest with you about what my motivation is for this class. And I say that right up front because I think too many people that put out presentations like this, and I've got a lot of competitors. There's a lot of people that want you to spend some money with their company to learn how to trade better. And I think too many of them are misleading or flatly dishonest in their presentation. They either try and hide the motive of the presentation from you, or they're completely dishonest about the results they get, or they're completely dishonest about how realistic it is for you to get those results. Let me give you one quick example. You've possibly seen some ads out there. In fact, I'll give you a couple of examples, and I'm not going to name names. I'm not here to try and name a specific name, but let me tell you how outrageous some of the claims are, and I'm sharing this with you because I want you to know that we're very, very different from this. I've heard ads on the radio and I've seen ads on television, and the advertisement goes something like this. I had $4,500 to trade with, and through a unique method that I discovered, I turned $4,500 into a $50,000 a month, not a year, a $50,000 a month income. And I can show you how to do the same thing. Now think about that. $4,500, and they're going to show you how to turn that into $50,000 per month. If that doesn't sound so ridiculous as to make you run for the hills and say there's no way I'm believing that, I don't know how you can get a more exaggerated claim. And I don't know if the individual that makes that claim did not actually do that. I know for a fact they cannot teach you how to do that. No one can teach you how to do that because it's not realistic. It's not sustainable. It's not duplicatable. There's another one that goes something like this. I took $2,000 and in a couple of years, I've turned it into a multi-million-dollar portfolio, and now I fly on private jets all around the world, and I day trade from wherever I'm at, and I can tell you how to do the same thing. Folks, it just doesn't happen. It just does not happen. The individual that makes that claim, maybe he did it. Maybe he actually did that. I promise you, he cannot duplicate it. I promise you, he cannot duplicate it. He cannot teach someone else how to run in to the same ridiculous, crazy, super high risk luck that he got if he actually turned a couple $1,000s into 2 million. What I'm going to show you today is a way to trade with little or no downside risk, make phenomenal profits, realistic profits, profits that you can live on, profits that you can grow, profits that you can retire with, but not these ridiculous turning $4,500 into $50,000 monthly income. I don't know how to do that, and neither does anyone else who will be honest with you. So I want to get that out of the way right up front. The other thing I want to be super transparent about, because I respect your time too much to mislead you, I'm going to show you some fantastic stuff today. I'm even going to show you a trade that you could put on right now and profit from phenomenally, whether you join the Safe Option Strategies program, whether you purchase our education or not. But I want to be honest with you. I'm not here in this presentation to show you everything that we do and to give away all of our secrets. That's not what this is about. My motivation for sharing this with you is to help you and to open your eyes to a different way of trading, a much, much more profitable way of trading, and to give you an introduction into how we do things at Safe Option Strategy so that you'll take a look at our education that we sell. Now if that causes you to want to log out of this presentation, then I'm going to say to you very respectfully, you're looking for something for nothing, and you're going to get exactly what you pay for. And I don't mean that as a slight. I don't mean that to be rude. I don't mean that to upset you. But if you're looking for something for nothing, that's what you're going to get. You're going to get a whole bunch of presentations like this that all make a great big sales pitch, and you're going to be frustrated because you're never going to get ahead and you're never going to learn the stuff that you want. I'm going to introduce you to some stuff that we do, but my goal is to get you to take a close look at the education that we sell, because I promise you this, if it's affordable to you and if you can take the time to learn it, the education we teach at Safe Option Strategies will be the most valuable investment you ever make. Okay, I'll get into that at the end of the presentation. Let's go back to our screen now. I know your screen looked like it was just stuck for all that time while you had to listen to me, but let me ask you, last year, one of the best years the stock market has had, how did you do? Oh, that's an irrelevant question if you didn't have money in the market. But for those of you that had money in the market, did you meet or beat what the indexes did? The Dow Jones finished up over 22%, the NASDAQ 35%, and the S&P kind of hit right in the middle of them at 30%. No surprise there. The S&P is the broad index that covers a larger range of stocks. So no surprise that the S&P ended up in the middle there. Those are historic years. Those are the best years we've had in 6 years. I think 2013 was the last time we had years in the Dow Jones, the NASDAQ, and the S&P that did that. Maybe you beat that. Maybe you came in a little bit below that. Maybe you lost some money. I'll tell you, a lot of people, in spite of how far the markets were up last year, a lot of people struggled, and I'll show you why in just a second. But you know those two examples I gave? You know, the $2,000 into multi-millions, or the $4,500 into $50,000 a month income. You know, those individuals to do what they claim they did, as a bare minimum, this would have had to have been about 220% or 350% or 300%, and they would have to do that a couple years in a row, or even 3,000%. I mean, to turn $4,500 into $50,000 a month income, you've got to do more than 10 times that capital amount of money every single month. Well, 10 times is like 1,000%, not 100%, and that's monthly. That's not even annually. So in spite of how good these returns were last year, they're not going to make you a millionaire overnight. I can tell you though that using the strategies that I'm going to introduce you to right now, this is what Safe Option Strategies did last year. This is the return we got, and these are verifiable, legitimate returns. I can give you evidence and proof of these returns. I can show you every single trade. Some people with the engineering mind, they like to back test our trades. I'm okay with that. You can go back and look at every trade we put on for the year and see how we got the results we got. This is duplicatable. Now, we don't get a 92% return every year. Some years we get 40, 45, 50% return. But I've not had a single year that I've taught the strategies at Safe Option Strategies where I have not beat the market, and I've had all but 1 year in 15 that I have not at least doubled the return of the index averages. Now, those are realistic returns, folks. Those are realistic returns. Those aren't this pie in the sky, you can make 10,000% return every month. That's just ridiculous. This is doable. Let me give you just a little bit of background on Safe Option Strategies, specifically on me, because I'm the owner of Safe Option Strategies. I'm the one teaching this. My first experience with stocks and options was some employee stock purchase that I was given in the late 90s. I built upon that. I started trading that employee stock. I started expanding it. I started selling some of it, getting into some other stock. And when the dot-com bubble burst in 2000, lost every penny of it. Every penny, had to start over. Over the next several years, I learned how to collar trade and spread trade, and I learned how to make trade adjustments. But I also went through $35,000 worth of investment education companies. That was some expensive learning. And I got to be honest with you, at the end of all that, I knew that I had a passion for the market. I knew that I had a passion to teach other people, because for that amount of money, I was sharing with every friend and family member that would listen to me everything that I was learning. I wasn't getting any money for it, but I was sure sharing it with them. It was an expensive lesson, and it fell far, far short of what I needed to be more successful. I started experimenting with my own strategies. I learned the basics of collars and spreads and started experimenting with a little bit of help from a mentor, some adjustment strategies. And I started Safe Option Strategies towards the end of 2004. First of all, as a weekly newsletter and one trade pick with a small explanation of how the trade worked. That has grown into a complete education program, more complete than anything you will find on the market. I stand by that. More content, more live material, more trades, better results, more consistent results than anything you're going to find out there. I guarantee that, folks. I've outperformed the market by double or more every year but one since 2005. Profited 20% in 2008 when the three major indexes were down over 50%. And I've taught thousands of students in over 20 different countries around the world for the last 15 years. I'm sharing this with you because this is not, I'm not some guy that took $2,000 and turned it into millions in a year and flies around the world day trading. I've built this up over time, and it's been proven over time. To the best of my knowledge, as far as what gets reported back to me, our average student at Safe Option Strategies beats the market indexes by more than double every year. Now, let's go. Here's what you're going to learn today. What to look at and who to listen to. I'm going to go through that part of it very quickly. How to trade with zero risk. This is the crux of what we do. The absolute heart and soul of what we do at Safe Option Strategies is teach you how you can trade with zero risk. I'm going to introduce you briefly to how to use trade adjusting to protect your portfolio. When you want to add a little more risk, but you want to manage it and have a little more profit potential, there are ways you can do that and still be much safer than most people in the markets. Okay, what to look at and who to listen to. Let's talk about what to look at first. With these historic highs, do you wonder why there are some people still losing money in the stock market? If you just look at last year and you look at the start to the finish of the year, that's a pretty good looking stock chart. That's some pretty impressive movement. But it's this movement in the middle, it's these back and forths, these direction changes. I stand by what I'm about to say. I've been saying it for years, and I absolutely believe it. Anyone can make money in a bullish market. I'm proof of that from the late 1990s. I'm proof of that. Anyone can make money when the markets are going up. Some people know how to make profit in a bearish market. When the markets are going down steadily, they know how to take advantage of that and put on trades that will profit them. Very few people, if any, know what to do when the markets are swinging back and forth like this. Even if the swings back and forth are only to the tune of 5 to 10%. That's not major market corrections. 5% is considered a market pullback. 10% is considered a correction. You got to go 20% down from the most recent high to be considered in a bearish market. A lot of times these are 3 to 5 to maybe 6 or 7% movements back and forth, but they wipe most people out because they don't know what to do in the direction changes. Okay, one of the best fixes to that is knowing what to look at. I am amazed at the number of people that get bogged down with too much technical information. I've been guilty of it at times. Have you ever heard the term paralysis by analysis? Okay, I'm not stealing that term from the recent TD Ameritrade ads. I've been using that term going back to 2004 and 2005. There are a lot of people who get paralysis by analysis. They overanalyze. That stock chart you looked at of the Dow Jones Industrial Average just a second ago, that looks kind of like this. Here, this one is of the S&P 500. But when I go to set up this chart to show my students or to teach a class like this or a presentation like this, the indicators that I can overlay on this chart, here's one list of 50 indicators. And I can pick any 3 of these to put on this chart. Do you know the number of combinations you can get of 3 different indicators when you have 50 to choose from? It's in the thousands. There are literally thousands of variations I can use to set up this chart. Thousands. I haven't even gotten into whether I want to do a 1-day chart, a 5-day, 3-month, 6-month, 2-year. You're looking at a 1-year chart showing all of 2019. I haven't even gotten into whether I want the chart to be candlesticks or OHLC bars or dashed line or dots or area, histogram, equivolume, candle volume, arms candle volume, Heikin Ashi, Kagi. This is what really frustrates a lot of people, is that there is so many different things you can look at and so much technical information in it that you can get into, that if you're waiting for all of it to line up the same way at the same time, it's never going to happen. It's never going to happen. You'll be frustrated indefinitely. If you want a simple technical formula, if you want a very simple technical formula for having a better idea of what the markets are going to do or what an individual stock is going to do, look for times when the RSI, I've got the RSI right up here, the 5 and 20-day moving averages right here, and the MACD right here. Look for times when they cross over the same direction, close to the same time, and historically, it is proven to be accurate for a trend change, not just a 1 or 2 day different direction for the stock to move, but an actual trend change 70 to 75% of the time. 70 to 75% of the time, when these 3 things cross over at the same time, you get an actual trend change. There's a big difference between a couple of days of sell-off versus an actual direction change, an actual trend change. Big difference. And if you focus on, now there's other things we look at. And here's an example of when those aren't accurate. Here we had everything cross over and then it reversed in just like a week. Okay, that happens sometimes. That's the 25 to 30% of the time when it doesn't work. I'm going to tell you in a couple minutes how to address that, how to take care of that 25 to 30% of the time when it doesn't work. But for right now, for what we're doing, focus for a minute on the 75% of the time it does work. If all you could get out of this class is to learn the simple acronym, keep it simple, KISS. I'm not going to tell you what the second S stands for. I don't want to offend anyone. Keep it simple. Now we look at other things. We look at resistance levels. We look at support levels. Occasionally we look at something like Bollinger Bands. We look at volume. We look at the news that is driving things to change directions and see if it's valid, if there's a legitimate reason for something to be moving in a different direction. We look at all of that. But if you focus and at the very least, you start with these three indicators, you're going to be right 75% of the time on the direction changes. And this is one of the key things to understanding how to make money when things move back and forth. Remember what I said? Anyone can make money when the markets are bullish. Some people know how to make money when the markets are bearish. Very few people, I think it's less than 5%, know how to make money when it goes back and forth. This is one of the keys right here. Learning how to be slightly more predictable on those back and forths. Because let's be honest, every move we make in the stock market is an educated guess, and your focus should be on the word your focus should be on the word guess. Every move we make in the market is a guess. We want those guesses to be far more educated than not, but every one of those moves that we make in the market is a guess on what the market is going to do next. Make it as educated a guess as possible, but start out right here. Now, before I go into how to trade with zero risk, let me just comment on who to listen to. There are hundreds, maybe thousands of people who have an opinion on what stocks are going to do. Some of them are considered experts. They're an economist, or they are a market analyst, or they're one of the talking heads on the bigger financial news stations, or they have more articles that they've written about stocks. You can get so bogged down with listening to the various opinions. How many times have you heard two different experts? They're both considered experts. And one of them tells you something very optimistic about what's going to happen with a particular stock or the markets in general. And one of them tells you about something that's incredibly pessimistic about what they're certain the market is going to do and what they're certain is going to happen in the market. How can they both be experts and they're completely opposite of each other? I'm going to tell you this: be careful who you listen to and never substitute another person's opinion for your own research. Look at a company's fundamentals. Learn to analyze what news is driving the direction a company's stock is trading. Learn how to make sense of it. I tell my students at Safe Option Strategies oftentimes the adage, you've got to be able to see the forest through the trees, but you also have to know how to not run into that next tree in front of you. There is a fine balance between keeping that bird's eye view of the forest so you know where you're going, but navigating the next tree that's right in front of you so you don't run into it. And a lot of times that comes down to your own personal ability to weed through the masses of information and come to the logical conclusion yourself of what is more likely to happen. Be careful that you don't listen to too many different people, because if you do, you're never going to know what to do. Every time you find someone that says a certain stock is going to go up, you're going to find a couple people that say that stock is going to go down. You know, Apple went from, I'm trying to think of the exact number. Apple had a huge move up last year. I think over 50% last year. Do you know I heard as many people say that Apple was done as I heard people that were optimistic on Apple? Every day I'd turn on the TV and listen to something about Apple because I watched the financial news stations. Every time I did it, I'd hear somebody saying Apple's no longer a growth company. They're a value company. They're not a bad stock to hold on to, but they're not going to grow. They've peaked. They can't produce anything brand new. They're going to try to improve on existing products, but there's no more vision. And it ended up being a bunch of bull. Okay. All right. How do you trade with no risk? Wouldn't it be great if you could set up a trade that had a great profit potential and you literally could not lose money on it? Does that sound too good to be true? I spent some time kind of harping on why you don't listen to things that are too good to be true when it comes to returns, right? But I'm going to show you how you can trade with little or no risk. When you own something that's worth a lot of money, you insure it. You insure your home, you insure your car. Some of you have artwork that you insure, you have jewelry that you insure. When something has a lot of value to it, you insure it. You know, most people have no idea they can insure their stock. When you use a long put option, now if you're new to the world of options, it's part of what we teach. I don't have time in this presentation to give you a whole lesson on options. Most of you, I've found statistically, most people that tune into this class and watch this presentation know something about options. But if you don't, that's okay. We can teach it to you. But a long put option in almost every single way imaginable works like an insurance policy on your home or your car. You pay a premium. You have a value attached to that policy, something that it's good for in terms of replacement value, and it covers a certain period of time. A long put option is exactly the same. It has a premium, a cost to that option. It covers you for a certain period of time, and it covers you at a certain value. And it works kind of like this. If you bought some stock at $100 a share and you went out and bought a long put option, if that stock loses value, the value of the long option goes up in relative proportion. So the stock just lost $50 from 100 down to 50. I've got one of those computer pins that draws on the screen. It's not drawing a very good line. The stock loses value from 100 down to 50. The long put option that you bought becomes worth at least $50. One offsets the other, just like an insurance policy. You've got a $500,000 home. A meteor from outer space lands on it and takes out the west wing of your home. And if your home is going to cost $200,000 to repair, your insurance is going to cover that $200. Your home went down $200,000 in value. Your insurance policy became worth $200,000. Long put option works exactly the same way. The gain in the long put offsets the loss in the stock. So you use it to protect a position. If you were to buy shares of Advanced Micro Devices, now this, I did a recording like this about a week ago, so the price on this is just a little bit old. Advanced Micro Devices is a little bit higher than that today, but this will still demonstrate what it needs to for you. So let me, AMD is trading a little over $51. So it's up a few dollars from where it was. But a week ago, you could have bought Advanced Micro Devices for $48. You could have bought a long put option that would protect it at a value of $48. And you could add a short call to that. Get someone else to pay for your insurance policy. And your total cost would be the price of the stock, the price of the long put, minus the credit you take in on the short call. And your total cost in that trade is lower than what you have the right to sell at. That, folks, is a zero risk trade. From now until the time that long put option expires, you cannot lose money on this trade. And if the stock went up and someone took it from you at $50 a share, because you're taking in that money in exchange for that, you're going to make at least 8% on this trade. Now that's the tip of the iceberg in terms of how much money you can make. I'm going to show you how you can profit in a phenomenal way in just a second on these trades. The important part is the setup and getting into a trade that has zero risk, absolutely 100% zero risk. Okay. Now, I know I already see some questions coming in. I'm going to nip this question right in the butt. We are insuring this trade for a very short period of time. And the question comes up all the time. What do you do after this expires? Well, what do you do when your car insurance expires? You pay monthly, or you pay semi-annually, or you pay annually for the policy. You pay for the next period of time. The difference here is that we're going to insure our stock through a period of uncertainty, because we're not out driving that stock like our car every day where other people can bang into it and hit it. We're going to insure it through the earnings report. And once we get past that earnings report and the stock is moving up or the stock is moving down, we'll make an adjustment to the trade. We'll reevaluate our insurance. And that's part of what we teach at Safe Option Strategies. And there's not, I'll show you a little bit of that. There's not a lot of time to get into that right now, but I'll give you an example of what we've done with that recently to help you understand that. But the answer to the question that some of you are already typing in is that prior to the expiration of this option, we teach you how to adjust the trade. We teach you how to adjust these long puts, and we teach you how to adjust these short calls. Okay, now let's expand on this a little bit. Here's how we make a lot more than 8% profit. When we set up this trade and the stock goes down, we take the profit from those long puts and we use that profit from the long puts to buy more shares of stock. You've heard of dollar cost averaging. You buy a share of stock at $100. The stock drops to $50 and you buy another share at $50. So your total investment now is $150 and you have 2 shares of stock. You've dollar cost averaged from 100 down to 75. Okay, that works fantastic. That's a smart way to trade in the markets until you run out of money. Because every time you add more shares to bring that average cost per share down, you got to come up with more money. The long put takes care of that for us. We don't have to come up with more money, or the money we have to come up with comes from the profit in the long put. We don't have to add money to our portfolio to be able to cost average down. So when we add that second share of stock and there's no additional investment on our part, our average price per share comes way, way down, because we got the first share for $100. We got the second share for $0. The profit here paid for this right here. So we got that second share for $0. So now we have 2 shares. We still have a net investment of only $100, and our average cost is $50 instead of $75. See the power of that? If that stock ever recovered back to $100, we're 100% profitable. And at $50 a share, we're break even in the trade. Now, I want to show you something we did over the last couple of years. Every Safe Option Strategy student that wanted to, every one of them that wanted to, was able to follow this trade to the letter. This is what we did at possibly the worst time we could have done. And we set up this trade going into an earnings report, just the way I showed you that AMD trade. We got into shares of Micron in March of 2018 when they were right up here by $60 a share. See that 60 over there? If you look at this chart and you look at how far Micron fell and the fact that they still haven't gotten all the way back up to 60, you would look at that and say, wow, that's a rough ride to be in that stock for that long and not even be back to where it was trading originally. Okay, we got shares of stock in March and we put long puts on them at a 60 strike price, and we got 70 strike short calls that were a little farther out in time to pay for them. And when they dropped, we took the profit from those long puts and we used that profit from the long puts to add shares. It was only enough to add 60 shares of stock. So we went from 300 to 360 shares of stock. They had a really nice, really short run back up to around 60, and coincidentally, it happened to be time for the next earnings report. About 3 months had gone by. They were due for another earnings report, and we knew that if earnings wasn't really good, there could be some trouble here. So just ahead of the next earnings, we made sure we had in place 60 strike long puts. Now, we had 360 shares. We had to buy 4 long put contracts, and we could only adjust 3 short call contracts. But we teach you how to do this. We managed it all. It worked out. Look what Micron did. Now, we had long puts that were going to expire right here, and we just rolled them out and down, and we still made up for all of that drop in the stock. And we had to adjust long puts again right here, and we still made up for all of that. And the combination of long put profit here and here and here made it to where we were able to sell long puts and add 340 shares of stock. The long puts paid for all that stock. We added 340 shares. We started out with 300, we added 60. Then because of that huge drop, we added another 340. And when and this is really key, when the stock got back to $42 a share, think about that. That's still down $18 per share from where we first bought. You want the math on that? $18 divided by a $60 a share stock. We were at this point in time, from where we first bought back here, this stock was still down 30% from where we had gotten in. But we had 700 shares instead of 300 shares. And at $42 a share, they were worth $29,400. $29,400 minus the $18,000 original investment is $11,400 profit. And if you divide that by the $18,000 original investment, when the stock was still down 30% from where we started, we were up 63% in our trade. Now, without going through every single detail of it, we made some adjustments in here. We did the same thing here, added a couple more shares, a couple hundred more shares. We had to make some adjustments here. These adjustments didn't net us a lot of profit. I'll tell you folks right now, the adjustments we made right here, they just kept us from losing money. They did not add to our profit. But with the stock up around $58 a share right now, and with us holding 900 shares, our little $18,000 investment less than 2 years ago, we're still a couple months shy of 2 years ago that we got into this trade. Less than 2 years ago, our $18,000 investment is worth over $52,000 right now. That's $34,200 of profit in less than 2 years. That is 190% profit in less than 2 years. Folks, what I just showed you is not this ridiculous pie in the sky. You can take $2,000 and turn it into $2 million. No, that's not what we do. But we took this amount of money and turned it into this amount of money in a little less than 2 years through a very methodical, very duplicatable process. That's one of the biggest keys to what I'm showing you, is that you can duplicate this. Okay, before I go into adjusting spread trades, I'm going to change my screen. I want to show you something. This morning, in a live class with my students, all of the Safe Option Strategy students have a live class every single morning that the market is open. We do a live class. A lot of them cannot attend that live class, so we record it, we put it online, excuse me, and later in the day they watch it, so no one misses out on it. I know everyone's schedule in the world can't conform to the time when I can get online live and do a class. But we showed all of our students a brand new trade that we're going to get into with Under Armour, and we did it a little bit different. And I'm going to show you this really quickly. With 200 shares of stock, okay, 3 long put contracts right at $20 a share where the stock is trading currently, 1 long call contract right at $20 where the stock is trading currently, and 2 short call contracts. We set up a trade that would cost a total of $4,027, could not lose more in the absolute doomsday worst case scenario. When Under Armour reports their earnings about 2 weeks from now, the maximum that this trade could lose is $27. When's the last time you had $4,000+ invested in a trade in the market that the worst thing that could possibly happen, if the wheels fell off and the world crashed and the markets crashed and global economies crashed, the worst thing that could happen to you is you could lose $27. Now, you want to know the best thing that could happen to you? This trade could make over $2,000 whether it goes up or whether it goes down after their earnings report. And this is a company that has a history of some pretty big movements up or down on earnings. I'm going to come back around to this. I just wanted to show you that this is part of what we do. This is part of what we teach here, and part of what we do is not just the strategies excuse me, and not just the philosophy that goes into this or the methodology, but we help our students set up trades. We put together trades with our students. That's part of what we do at Safe Option Strategies. Now let's go back over here. Some people don't like to trade anything but options, and I'm running out of time, so I'm going to go through this really quickly. If you want to trade just options, options only, okay? If that's your game, you don't want to own any stock, let me tell you what trading options without adjustments is going to do more often than not. You're going to find that you can profit on 3 out of 4 trades and still end up with a losing portfolio. And here's the reason why. Most people take their profit and they add their profit back into their principal for their next trade. And that's smart. That's a good thing to do. I don't ever tell my students not to do that. I encourage them to do exactly that. They take the profit from this trade, they add it to what they started with, and their next trade is $1,000 more. They take the profit from this trade, they add it to what they started with, and their next trade is that much more. The problem with that is when you're trading options only and a trade goes against you, this is nothing. This is a blink of an eye. You can be looking at a profitable trade in your portfolio one day. You can be looking at a profitable trade in your portfolio one day, and a little movement on the stock in the wrong direction can show that thing at a 40, 50, 60% loss the next day, and sometimes as much as a 70, 80, 90% loss in the blink of an eye. When you're trading options only, this is what happens. And it happens a lot. Probably more than any one thing I hear in all the conversations I have with people that are looking at safe option strategies, probably the thing that I hear most is that they're profitable on 4 out of 5, 6 out of 7, 9 out of 10 of their trades, and they're still break even or losing money. When you learn how to adjust trades, you're going to get a little more conservative on the returns you go after. You're still going to reinvest the profits back into the next trade, being a little bit more conservative on the next trade. And the reason you're being a little more conservative is because you're setting up trades that can be adjusted. Now, I wish an introduction class like this had time to go into how we adjust trades. On my website, there is a link on the same page that you're watching this video on. Now, those of you that are with me live, you'll have to go to the website after this. But those of you that are looking at the recording of this, on that same page, there is a link that says view some sample classes from our program. One of those sample classes is an introduction to adjusting spread trades. Take some time and look at that class. I don't have time to go into it in the detail I'd like to right now. But when you set up these trades so that they can be adjusted, that one that moved against you, because it was set up correctly and because you knew how to adjust it, you can turn it into a 0 loss, maybe even a profit, or a much smaller loss. And look at the difference with the same 4 trades over the same period of time. Look at the difference. Now, in our education program, we teach in detail. After we teach you how to set up a certain type of trade, we teach you in detail how to adjust that trade, all the different ways that trade can be adjusted, and when and how and why to do it. So as you go through our education, you learn how to manage and take care of and adjust these trades, and take a trade that could have been a losing trade and turn it into a profitable trade. This is our trade record for last year. This is how we got to the 92%. Now, this screenshot would only fit about half of it. You're seeing about the second half of the year. First half of the year doesn't look much different than this. But I'm highlighting a couple of the trades from last year that should have been losing trades, and we either adjusted them back to a profitability or to a much smaller loss. This 26% loss on this trade right here, that's a 26% loss, if you can see that. That should have been a 90% loss. That trade went so horribly against us in the blink of an eye. We did our homework, we set up a trade, we thought it was a good trade. We're looking at all the technical analysis and fundamental analysis, and we're looking at all the stuff we're supposed to look at, and you can still be wrong. And we were wrong. And that trade should have cost us 90% of what we invested in it, and we adjusted it to only a 26% loss. And that to me is a huge victory. Same thing here. This should have been a 75% loss on this trade. This one should have been at least a 45, 50% loss. We got out with 5% loss. I'm more proud of these ones that we lost money on in some ways. I hate losing money, but this is what the adjustment strategies will do for you. And if you want to survive and thrive in today's market, you've got to learn how to do this, because anyone can make money when the market is going up. Some people can make money when the market is going down. And when the markets go back and forth, or an individual stock you're trading goes back and forth, most people lose money. Either find a way to make those losses fractional compared to what they could have been, or find ways to turn them into profitable trades or break-even trades. And it makes all the difference in the world. And you can produce returns like this. This is what we do at Safe Option Strategies, folks. Learn to collar trade with some of your portfolio so that it's never subject to any risk at all, and get a little more aggressive with some of your spread trading, but make sure you do it in a way that you can adjust it, and a way that you can fix a trade that goes against you. And this is the way we're helping people succeed in today's market. If you're only interested in the option trading and collar trading holds no interest to you whatsoever, you can do the spread trading course by itself. If you're only interested in collar trading and the spread trading because it has a little bit of risk with it and you just want the zero risk stuff, you can do the collar trade course by itself. Okay, I'm going to shock you right now and share our prices with you. A lot of companies that do an intro presentation like this, they won't tell you what the cost of their program is, because they want to get you on the phone and try and sell it to you. Folks, I don't employ any salespeople. If you have questions, you're going to call me or you're going to email me, and I'm going to answer your questions. And I don't have any salespeople. So I'm going to show you what the prices of our program are, and then I'm going to show you how to get a really nice discount on the program, and then I'm going to throw one other offer out. Our 2020 pricing, the spread trade program is a little more involved. It's more classes. Oh, I should mention also, don't log off, because I'm going to get to the best part. I'm going to show you a pretty sizable discount on this class. So if you're a little bit sticker shocked, I hope you're not, because if you've looked at investment education, these full retail prices of our program are inexpensive compared to most of what's out there. They're really, don't suck into these companies that want to sell you an education for $50 a month or for $500, because they're looking to get a foot in the door so that they can upsell you to $10 or $15 or $20,000 worth of education. Folks, I've been in this industry a long time. Nobody in this industry sells you an education for $50 to $500 or even $1,000. No one. If they want that much money from you and you think that's a good deal, they're going to give you one piece of the puzzle and tell you that it doesn't work without the next piece, and they're going to charge you double or triple for the next piece. Okay, now with that out of the way, I forgot to mention, all of the trades we send to our students come out after the market has closed at the end of the day and are set up for the next morning. You do not have to be in front of the market during the day to do our program. Whatever time you want to spend going through the classes, that's up to you. It's self-paced. You can go through it in a few months. You can go through it over a year. You can repeat classes. Every single class in the program, you can watch it over and over and over and over again. Every live class we do gets recorded and gets posted to the website. You can watch those over and over again. There is a tremendous amount of content. To my knowledge, more content than any 2 or 3 investment education companies combined. We will teach you everything you need to know to get good at this and to do this and to be able to do it on your own. But we will provide you with trades, several trades every single week that you can put on starting on day one. Starting on day one, you can put on the trades that we send out to our students and start making money while you're learning how to do this. And honestly, it takes about 30 minutes a day, and it does not need to be while the market is open during the day. We have built this system, we have built this program for people who don't have the ability to watch the markets all day. And I've got students who do like to watch the markets all day, and they are able to, and this is still ideal for them, and it still helps them out tremendously. Okay, anytime you combine both courses, we offer a discount. If you add these two together, you see that comes to $3,500 and we discount it a little bit. And if you add these two together, you can see that comes to $5,500 and we discount it a little bit. But I'm going to do 2 things for anyone who is watching this presentation live, or for anyone who watches the recording and will email me immediately following, like right after you watch the program, watch this presentation, you email me. There's no obligation to buy anything. There's absolutely zero obligation to buy anything. And all I'm going to do is answer your questions. But for anyone who is willing to send me an email, I'm going to offer you a really nice discount over these prices, number one. And number two, I'm going to send you out all of the details, the specific details of that Under Armour trade that I showed you, that you could put, if you want to, it's up to you, you could put money into that trade and you are guaranteed to lose no more than $27. And if that stock moves on its next earnings report, you're going to make money, up or down. And you don't have to worry about whether it's up or down. And earnings is coming up, I believe, on the 7th or 8th, 6th, 7th, 8th of February. So whatever day you're watching this presentation, if you still have time before the earnings report, because I do a new live presentation like this about every 2 weeks. So by the time we get to Under Armour's earnings, I'll be ready to do a new presentation. So if you view this video, if you go through this presentation, and if you'll send me an email when it's done. Now there's 2 ways you can do that. You can email at info@safeoptionstrategies.com. So safe option singular strategies plural, safeoptionstrategies.com. You can email me at info@safeoptionstrategies.com. You can call if you want, leave a message, make sure we know your email address so we can send, because if we don't answer the phone and you leave a message, we'll get back to you as soon as we can get back to you, okay? Or if you're watching the recording of this, the page that you're on my website, there's a simple form you can fill out right below the video, and it asks for your name, your email address, and your phone number only if you want to call. You do not have to put a phone number in that field. If you don't want us to call you, we won't call you. If you put a phone number there, we're going to assume that you want a phone call and you want to talk to someone, and myself or one of my employees, I've got other employees, but they're not salespeople. They'll answer your questions for you. They'll answer your questions honestly. It is 100% up to you if you want to join our program. Folks, the discount I'm offering on the program makes it incredibly affordable relative to what you get back out of it. In fact, it's ridiculous. I've been told by other people in this industry that I should be charging 3 or 4 times what I'm charging as a minimum, as a starting point. But I don't feel the need to do that. What I charge allows me to run a business and pay my employees well, and I love teaching this to people. Now, one question came in. I know we're going a little bit long. I told you 35 to 40 minutes. We're probably closer to an hour. One question came in that I want to address really quickly before I end the recording. And then those of you that are with me live, I'm going to stay online for maybe another 20 or 30 minutes, answer any other questions you have. But I'm going to answer this question right now as part of the recording. Almost every time I do this program, I get asked about a guarantee. Let me be really, really clear on the guarantee of this program. Number one, I give an unconditional money back guarantee for the first 30 days. You could change your mind. You could purchase the program and change your mind, and I will give you your money back, no questions asked. That's for the first 30 days. Past 30 days, I will still give you a 100% refund if the things that I am teaching and the trades that I am sending out to you are not making you money. And the only catch to this is you've got to give me an opportunity to look at what you're doing and see if I can help you fix it. If I can't, you get your money back. It could be 6 months down the road. It could be a year down the road. For 30 days, unconditional. You can change your mind. I'll give you your money back. I don't want anyone feeling trapped in this program if they purchase it. If it's not the right fit, 30 days is more than enough time for